Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about CME Group INC quarterly report. CME Group Inc. offers a diverse range of businesses and services, including futures and options trading on various products such as interest rates, equity indexes, foreign exchange, agricultural commodities, energy, and metals, fixed income and foreign currency trading services, clearing house services for futures and options contracts, cleared swaps, and trade processing risk mitigation services, market data services. Including real-time and historical data, these services cater to a wide range of clients, including professional traders, financial institutions, investors, corporations, governments, and central banks. The recent surge in CME Group Inc.'s stock price, exceeding 23.43% over the past year, can be attributed to several key factors. The company's robust financial performance, driven by record-breaking earnings and revenue growth, has been a major contributor to its success. In 2024, CME Group achieved its best year ever, with record annual average daily volume, revenue of $6.1 billion, up 10% year-over-year, adjusted operating income, adjusted net income $3.7 billion, and adjusted earnings per share $10.26. Strategic initiatives have also played a significant role in the company's growth. The partnership with Google Cloud is expected to transform derivatives markets by enhancing data access and analytics tools. Additionally, CME Group has shown strong growth in cryptocurrency derivatives, with plans to launch options on Solana, Sol, and XRP futures in October 2025. The company's efforts to increase retail engagement through partnerships like the one with FanDuel are also contributing to its success. Furthermore, international expansion, driven by strong demand for benchmark products, has been a key driver of growth. The sale of OSTTRA is anticipated to generate a gain of approximately $300 million for CME Group in Q4 2025. Analyst upgrades and positive market reaction have further boosted the company's stock price. In September 2025, CD Research upgraded CME Group's stock to buy from neutral, citing upcoming catalysts, a strong capital return outlook, and the inherent defensive qualities of the platform. The combination of these factors has underscored a period of significant growth and strategic advancement for CME Group Inc., directly contributing to its stock price appreciation. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth is primarily driven by clearing and transaction fees, which increased by $3,953.2 million in the 9 months ended 2025, representing a plus 5% increase. Market data and information services also contributed to revenue growth, increasing by $595.1 million in the same period. Additionally, agricultural commodities and metals saw significant increases of $16.8 million, 12%, and $7.6 million, 11%, respectively. On the other hand, revenue decline was primarily driven by interest rates, which decreased by -$27.8 million, 6%, in 2025 compared to 2024. Energy also contributed to revenue decline, decreasing by -$26.9 million, 13%. Foreign exchange transaction fees declined due to lower volatility within U.S. Treasury products. Net income and profit margins. A year-over-year analysis, the company's net income experienced a significant change between 2024 and 2025. While it decreased by $4.8 million on a quarterly basis, it increased by $237.1 million year-over-year, YoY. Notably, the net income remained unchanged at $908 million in both years. Profit margins also underwent changes during this period. The operating income margin and net income margin decreased from 64.7% to 63.6% and 57.6% to 56.3%, respectively. However, the operating margin for the 9 months ended September 30, 2025 increased to 65.9%. The reasons behind these changes are multifaceted. The share repurchase program had a minimal impact on net income due to the low number of shares repurchased. Conversely, increases in investment income, equity and net earnings of unconsolidated subsidiaries, and higher cash performance bond and guarantee fund contributions contributed to the rise in net income. The company's financial performance indicates a positive trend in its operating cash flow. As stated on page 12, the net cash provided by operating activities reached $143.2 million in 2025. This increase is also evident in the first 9 months of 2025, as noted on page 39. The fact that revenue recognition may not be entirely cash-based, page 15, does not detract from this positive outcome, suggesting that the company's operating cash flow is indeed generating a significant amount of cash. The company's debt level and interest expenses have undergone significant changes over the past year. In terms of debt, current liabilities have risen by $47,273.30, long-term debt has increased by $743.10, and total liabilities have surged by $48,994.20. These increases indicate a substantial rise in the company's financial obligations. Regarding interest expenses, there is a notable increase from 2024 to 2025. Interest paid rose from $106 million to $111.7 million, while interest expenses for the quarter ended September 30, 2025, jumped by $476.6 million compared to the same period in 2024. The first 9 months of 2025 saw a $749.1 million increase in interest expenses. These changes suggest that the company's debt level and interest expenses have increased significantly over the past year. Management is optimistic about the company's outlook, citing its ability to execute its growth strategy effectively while managing risks and costs associated with acquisitions and investments. The company aims to continue generating funds and managing indebtedness for business investment, maintain its brand and reputation, and address industry consolidation. In terms of market conditions, management notes that uncertainty subsided in Q3 2025 due to clarity on Federal Reserve policy decisions and consistent inflation data. This led to lower interest rate market volatility, but overall interest rates remained high due to geopolitical tensions and economic impacts of tariffs. The company's business performance has been strong, with cash markets revenue increasing due to higher transaction fees from BrokerTec fixed income and EBS foreign exchange volumes. Management expects to maintain an investment-grade rating due to its strong cash flow generation and debt repayment capabilities. Looking ahead, the company plans to repurchase up to $3 billion of outstanding Class A common stock through a share repurchase program, demonstrating its commitment to returning value to shareholders while maintaining a solid financial position. The company's financial summary reveals that it has engaged in both dividend payments and share buybacks. Specifically, the company paid out $456.5 million in dividends, as noted on page 9 of the report. Additionally, the company has also bought back shares, with a total allocation of up to $3 billion mentioned on page 9, although there was a net outflow of $8.2 million, as reported on page 12. That concludes the financial summary for CME Group INC. Feel free to comment below, and I will be happy to answer them when possible.